let's welcome on board a very special lineup of guests, and who better than Porinju Veliyath, the MD and Portfolio Manager at Equity Intelligence India Private Limited. He joins us, and we've also got on board with us Neelkan Mishra from Credit Suisse joining in. And before I go to Porinju, since pictures speak louder, Nikunj, than 1,000 words, let's have a picture up on board which perhaps introduces Porinju better than anything else. So there you go. That's the farmer Porinju. Porinju, if you can see that picture. So who's going to be happier today, Porinju? Is it going to be the farmer Porinju or investor Porinju?
No, I'll tell you something before you go to him. Farmers don't pay taxes, investors in India don't pay taxes.
As of now.
As of now.
As of now.
As of now, right?
No, I didn't get it.
Farmers in India don't pay taxes. And if you're a long-term investor in
farmers,
India...
So who's going to be happier today, the farmer Porinju or the investor Porinju?
I find a lot of similarity between a good investor and a farmer. Basically, a farmer will not be a farmer if he's not optimistic. It's very important. He's optimistic about the weather, the rainfall, all those kind of things. And still people suffer. And it's true that Indian farming community, the rural stress, it's so much known. I think India needs a green revolution. Maybe the second green revolution after 60s. 60s we had a green revolution. I think it's time for big bang reforms and a huge spend to help our farming fraternity and to improve the rural economy. I feel there will be definitely much more than expected kind of
so you're definitely expecting that there will be that rural push which everyone's been talking about. That's the stress sector, and the finance minister will definitely pick up on it.
Yeah, and we are powerful today. We are resourceful enough to do that. So I expect a very, very huge fund allocation and innovative schemes for this achieving our target of doubling the farmer income by 2022. It's very important. It's an excellent move by the government, at least to dream so. Even though there were many people who were initially immediately criticizing the move and that desire, the aspiration. We can't kill aspirations like that. India is having potential. So why can't we dream and why can't we having aspirations to grow big?
Right. Porinju, for an investor, it's all about stocks. So if that agri push or rural sector push does come about in the budget today, what are the themes that you bet on? Because this is a large gamut of names that we are talking about. Everything from a Dabur to a Unilever to a Mahindra and Mahindra tractor manufacturer like that, or for that matter, some of the fertilizer companies, everything stands to benefit. So how is it that you pick and choose that if there is an increased rural allocation in the budget, what stocks will I buy?
I'm not, Aisha, I'm not into that kind of, a category where, you have different budget provisions touching rural or agri, different kind of industries, and buying stocks accordingly. Okay. It doesn't work. It was the thing of really the past. Now, see, either India can really progress, and we have really set a stage for a takeoff of the economy. If it is not interrupted and if it moves forward, I'm telling you, every sector, India is the theme. I have been talking this many times. No single sector can go alone. So that's the structure of Indian economy and the structure of our, the demography. The whole country is going to move. The nation will be taken forward. So right. I think I appreciate the government for making a stage set for a takeoff at this point of time. I am very optimistic. We had 2 years of structural reforms and those restructuring of the economy, which should lead to a much higher growth. I strongly believe India, our economy is going to grow at 8% plus for the next 2 years.
Porinju, I have to ask you about how much the market is prepared about tax tweaks. That's top of the mind. I know at the core of it, sector-wise, it will be focused, the budget essentially will be focused on infra spending and giving the desired rural push, as we saw. That's something that is very close to your heart. But really, in terms of tax tweaks, how much do you think the market would get impacted by what comes out in the budget?
Okay. I don't think any big move in the market just because of the budget. Because we have, as an economy, we have around 80 to 90% of our economic developments reforms and actions by the government has been taking place outside the budget in the last couple of years. So that way, I don't think there is going to be any huge movement because of the budget. But at the same time, see, something very peculiar happened in the stock markets in the last 1 month, January. There was a significant correction in the mid and small cap segments in general. This was due, in fact, because the way these stocks have been running up in the last 1.5 years' time, after the demonetization loss, that's something. It was very unprecedented kind of move. Stocks have moved up by 5 times and 10 times, some of them, and most stocks have doubled or maybe 70–80%. It has investable variety of stocks. So that way, I think a correction was required. My own portfolio management was down by 3.21% in the month of January. I have been mostly focusing on the mid caps and some large small caps, the emerging Indian companies. I was expecting this correction. And it has really happened, whereas media and the general public may be not really aware about this, because index, the Nifty and Sensex have been going up. I think we had something like 4.5% movement in the Nifty during January, whereas most investors who directly invest in the stocks, other than those blue chip investors, they have seen a decline, a dip in their net worth or the NAV. So that way, I think the correction is over. So market is set, and the worst thing that can happen to the market, in case of not a favorable budget, markets can consolidate at this level for some time before further movement. Otherwise, I am very optimistic on the economy and on the equity investing as such. And I used to talk about these, the money, the amount of money which can come into the equity markets. This is unprecedented, never happened in the history of India. So, and we have seen only tip of an iceberg. If you have seen the domestic savings moving into the financial assets, especially the equities. We are going to see manifold increase in this asset allocation to equities. Right. And there is a space in Indian economy for this equity allocation.
Porinju, I'm going to ask you a realistic question, and I'm going to paint 2 scenarios. First scenario, the taxation cycle is changed from 1 year to 2 years. What will be the immediate impact on the market? And B, there is long term, which is 0 right now, moves to, let's say, 15%. What happens in that scenario? Both the scenarios. And give me a realistic answer. I know you're a long-term bull, Porinju, but I want a realistic answer about what will happen to markets immediately.
Me?
Yes.
There will be 0 impact to the market. Equity investing will have 0 impact on this. First of all, as you rightly told, Nikunj, we have a STT paid. And the basic factor I will tell you, if long-term capital gains introduced, say, at 10 or 15% today, government is not going to make much money. If they had done it 2 years ago, I'm telling you, there was massive wealth created by equity investors, especially in the long-term gains, and that high-speed wealth creation is already over. Now the STT collected is also a significantly good amount. And even though I welcome tax on the long-term capital gain, I don't think it's very important. And another thing, no investor is going to avoid equity just because there is a long-term capital gain of 10 or 15%. So that way, for equity investing, I feel this yes or no on the long-term capital gain taxation will have 0 impact on the markets. But for the 2 days or 3 days kind of some knee-jerk reactions. So this is something I feel lot of small investors out there, they are scared about this. A lot of them are fearful that markets may crash if the long-term capital gain tax is imposed. I think this is something I can assure you this can be totally ignored by the investing community.
I think we should not lose sight of the fact that we are in middle of earnings season. We got a good handover from US markets. We've seen an accelerated sell-off in mid-cap stocks. And before I go to Tanvir, actually, Porinju, this question is coming your way. Mid-cap stocks have fallen, Porinju. And you are a mid-cap and a small-cap specialist, if I may use that word. So what is a specialist doing now? Buying the fear in mid-cap stocks?
I think this correction, as we discussed already, is very healthy. And that is taking away the excesses in the market. And too much leverage positions. And the complacency is gone in the last 2-3 weeks. It's very good, and that's keeping the market healthy and I would say more matured. So that way, I think again it has created a a stage for picking stocks, but very selectively. And investors have to be extremely cautious this time or this coming rally in the next 2-3 years. See, many companies and businesses are going to be out of business. It can be not very relevant going forward. Even though India has such large variety of segments and companies in different sizes and in services or in manufacturing, see, it's a fantastic area, a segment for value investors to pick stocks. There is no doubt about that. I am very optimistic, but the times of multi-baggers,
So Porinju, what we have on your screen is just in teaser that you would be giving your followers and our viewers 5 new stock ideas today.
Oh my God.
5 new stock ideas. That's a promise, right? So our viewers are in for some, extra, budget treat, so to speak, because the market maverick would be giving us, 5 stock ideas today. As promised, Porinju has agreed to share his 5 new multi-bagger ideas, and the pick, and this is a new pick by the way, get your pen and pencils down, is HCL Infosys. To introduce the company, it is a Delhi-based company. They were in the business of hardware, and they are also reinventing themselves by doing financial inclusion projects. So Porinju, I've just introduced the company. Let me understand your rationale. Why do you like it, and what is your price target for this one?
Nikunj, I was looking at some companies, which are still underperformers and have a potential to do well in the given economic environment in the country going forward. So, of course, HCL Infosys, it's a fantastic management, promoters capable of creating wealth. They have been going through tough times. They have been reporting huge loss in numbers. And I think it's at an inflection point. That business has got more relevance, and they are restructuring according to what they give to report to the stock exchanges, and they are getting away with some of the non-core businesses. Today, I read in ET, they have sold some their care division for 30 crores to somebody. So those kind of restructuring and reorganizing the business and focusing on the mainline distribution with using their large network all over the country, I think at around 1,700 crores market capitalization, it can be a wealth creator going forward. But I don't think investors should jump into the stocks, because we had a huge run up in the mid cap and small cap segment at comfortable time when markets are not doing so well. Investors should focus on such underperformers if they have got a relevance going forward. So HCL Infosys is one such stock. I feel we are holding the stocks. We have recently acquired some shares in portfolio management, and I'm holding personally too.
You've got first pick, which is HCL Infosys. Let's go to Porinju for his second pick. And I've been told that you have Inox in as one of your next multi-bagger ideas. So is it largely because of your personal movie habits? First day, first show, every Friday you go to Inox and you've got this idea?
Nikunj, this multi-bagger is not an easy word to be used from here on. That era is over in my understanding. So if investors should be reducing their expectations, aspirations to maybe 15-20%.
Track record. So you've already raised your bar.
No. See, it was a particular period of time, an era of multi-baggers in the country because of huge undervaluation of companies since the fall of 2008-9. I'm telling you, there were companies, excellent growing companies in India were available at 2 and 3 times their earnings.
Okay.
So this is like never before. And it was so stupid of the market to ignore such kind of values because those companies were small. And some of those companies have, migrated to large caps and, larger companies.
So very quickly before I go give it to Aisha, why do you like Inox? What is so unique about Inox?
See, Inox, it's a clean company, and, it's an emerging segment in the country. More and more people are going to go to the theaters, multiplexes for watching movies. And, I am very optimistic about this business segment going forward. They are one of the largest market players. I think around nearly 500 screens they have. And I am expecting significant growth in that segment, their revenue models, especially the non-ticket revenues. I think it's a fairly well-managed company also. And comparing to the PVR, it is looking like a little more attractive on valuations. So for a reasonable compounding, not for as a multi-bagger, I think this is one safe company
Right.
to bet with.
Okay, so
I'm not holding the stock.
Okay, I'll just take the liberty of taking the third idea now. We've got two ideas. Let me mark those two stocks. We've got HCL Infosys and then Inox. And your third idea, Porinju, I will not use the word multi-bagger here, but let me use the word outperformer. Why do you think Tata Power has scope to outperform?
Yes, Nikunj, this is something we discussed recently. You know, the Tata Group, the attitude is changing, the culture of growth is changing. I think Mr. Chandra is looking at, more profitable growth, selling off what is not required, what is not the core expertise of the group. So that way, Tata Power is a very large company with too many verticals within power, infrastructure and defense kind of things. This is a big underperformer in the last 10, maybe more than 10 years time. And there are other companies like Tata Projects, its subsidiary, and TRF and some arts and engineering group companies, small companies, listed companies. I think from the indication what the promoters, the management has given, if those things are implemented, the restructuring of businesses and selling of the non-core businesses, etc., this Tata Power can create wealth. It can be a decent compounder going forward. And the downward risk seems to be very limited. But there are many ifs and buts in the case of Tata Power. We have recently bought some stocks. As a disclaimer, I want to put that. I am personally also holding some shares.
Okay, thank you for that disclosure.
We've been giving you some stock ideas from Porinju, and he's already talked about why he likes Inox as well as why he likes HCL Infosystems. Porinju, time for the other ideas. What else do you have in store for us?
Aisha, I feel in fact, a bit embarrassed to go on talking stock names, especially in the given, the regulatory environment. But you are burdening me with that. So another stock we just discussed is, Leel Electricals. It's a mid-cap company. Earlier Lloyd Electricals. I think the stock is now around 1,100 crores market capitalization. This is, in manufacturing. India is going to have, little better times going forward. I'm very confident. A lot of segments of the manufacturing, India is getting a better edge over China because of the wages in China is really moving up in the last 2-3 years. So this is so I think they are original equipment suppliers in the air conditioning, and it's a consumer durable company with manufacturing capability. And recently they sold their the consumer division to Havels, something like 1,500 crores of enterprise value, and making it a strong balance sheet after this. I think this company can give a decent return, decent compounding return for the investing community. There are a lot of them. I'm just telling one. In that segment itself, 2 days back we got one company listed, and many companies are coming with public issues. And the consumption story in India, it is going to surprise everybody in the next 1-2 years. We have set a stage, as I told earlier, for a higher growth, for higher income. The per capita income is also going to move up significantly. We can't remain at this $1,700, $800 kind of per capita income. So looking at the micro environment, I feel companies like Leel Electricals, a lot of them are there. I just told one name because you are forcing me to tell names. So this can be a decent compounder. The stock has moved up a bit in the last 1 year.
When we have three of the best stock pickers in India on the channel, Ramdev Agrawal, Nilesh Shah and Porinju,